Thank you for tuning in. Dividend Dashboard here, and finally we completed the first half of 2024. And in this video, we are going to cover several things. We will do a quick update on the YouTube channel, talk about Robinhood Gold, and the monthly portfolio update, which includes dividends received, dividends year over year, portfolio value, performance, holdings, and much more. Let's dive in. In the recent months, I have received a lot of traction in some of my videos. This brought a lot of viewers, new subscribers, and overall moving the channel in the right direction. In terms of subscriber growth, the last time I did an update, I believe I was celebrating that I reached the 1,000 subscriber mark. Now we are getting closer to 1,500. So thank you for supporting this investing journey. It really means a lot. If you are a new viewer, welcome. In this channel, I document my investing journey straight to the point and in full transparency. So if this is the type of content you enjoy watching, consider subscribing. It's free, it helps the channel grow, and it helps the small investors community to continue expanding. The brokerage account I use is with Robinhood, and I wanted to add to this update that I started paying the Robinhood Gold subscription. Robinhood Gold is a premium service that includes additional perks to your investing journey. The subscription includes 3% match on your IRA contributions, 1K margin interest free, 5.5% APY on uninvested cash, 1% matching on your deposits, 50K instant deposits, Morningstar research, real-time market data, and the Robinhood credit card if you apply. All those features for just $5 a month. The feature I will be using the most is the 5.5% APY, the 1% deposit match, Morningstar research, and possibly apply for the credit card. Since I invest $130 a week into my brokerage account, I already get back $5.20 a month. That pays for the membership. Since I don't use all my deposits at once, that uninvested cash accrues interest with the 5.5% APY. If things move in the right direction and I increase my deposits, the 1% match will continue to compound into higher numbers. By the way, I am not sponsored by Robinhood and terms apply to the premium services. Moving to the updates, the companies I bought for the month of June: Hershey's 0.13 shares, doing a small DCA on this company, Google 0.27 shares, slowly increasing my stake, Nike 0.65 shares. This company reported earnings and investors did not like the results, so the company went down 20%. Visa 0.84 shares and MasterCard 0.34 shares. Google, Visa, and MasterCard are part of the high grading of my portfolio goal, so I will be constantly buying small tranches. Now, for the month of June, 10 companies paid me a dividend. Kroger $5.07, Visa $1.87, Johnson & Johnson $8.37, Home Depot $2.82, Hershey's $19.25, Realty Income $5.75, Google 51 cents, Waste Management $3.12, Pepsi $6.78, and Digital Realty Trust $9.29, for a total amount of $62.83, making this month the largest dividend received so far. And we can see that on the dividends year over year. 2023 was the year that propelled June to new heights. This is because in that year is when I bought Hershey's heavily, and that is one of my top payers. Without downplaying the other years, the increase has been great, going from $1.50 in 2020 all the way to $62.83 in 2024, with increases over 50% and in some occasions over 200%. Looking at the portfolio value, we are sitting at $21,478.40, with $95 in buying power. Dividend yield of 2.78%, which translates to $539.81 in projected annual dividends, and we remained at 23 holdings. Performance-wise, we are kind of flat. Not much movement in the 1 week, 1 month, and 3 month chart. Year to date, we are up 3.41%. Same comments as the previous update in May. My portfolio is not moving that much in terms of value, but I continue to accumulate stocks and therefore increasing my dividends. I believe this is a normal scenario in the 20K mark, and over the long term, I believe it will move up by the force of higher dividends and bigger portfolio value. Taking a look at my 23 holdings, I've been focusing on increasing my stake in Visa and MasterCard. Visa sitting at 5.84% and MasterCard 6.45%. I want both holdings to be a core part of the portfolio and have a higher allocation. I'm aiming for around 10% each. The increase of both has made my largest holding, Hershey's, to reduce in percentage. The combination of Hershey's going down in value and investing money in other companies is a way for me to rebalance the portfolio without the need of selling. Another notable company that I'm adding is Google. The company and their products are amazing, fundamentals are on point, and I can't go wrong by increasing my stake in this company as well. Overall, the trend of increasing high-quality companies and decreasing large holdings without selling like Hershey's will continue for the next months, and it goes in line with my 2024 goals of high-grading the portfolio. Now you are seeing the annual dividend per holding. This is the amount I receive yearly with the amount of shares I have. Realty Income and Hershey's bring a huge chunk of dividends, but don't let that fool you. There's also several companies in the 20s and 30s, bringing a decent respectable dividend. Over the years, we'll see how this develops. Now we have the total return of my holdings. The last week of June got crazy, slight pullback on all holdings, but the ones that draws the attention is Nike, down around 20%. They reported earnings which didn't go well. They also lowered their guidance and Wall Street analysts reduced the target price, causing the stock to plummet. In my opinion, this is an overreaction of a drop, and that's the nature of a cyclical business. Consumers usually pull back on certain products, and Nike could be one of them. Nike is less than 2% of my portfolio, so this drop did not affect the total value. Other than Nike, we got Hershey's, that went down after having a massive recovery. Realty Income with the pressure from interest rates, Johnson & Johnson and their certain pipeline, and overall all other companies that are in the red are just part of the recent pullback. The rest of the companies that are in the green also suffered from such pullbacks. However, the capital gains are so high that it might take a recession to knock them down. Portfolio is great despite being stagnant. The mission of buying high quality companies will eventually pay off, but for now, we will continue to buy more and reinvest more. That will be it for this video. Thanks for watching and supporting my channel. I'll see you in the next one.